Yonghao, Chief Investment Officer for the Asia Pacific at UBS Wealth Management. So what's behind your thinking here?
Well, globally, we still see a lot of uncertainties, particularly in Europe and in China as well. But equity are cheap. That's why we
cheap for a reason.
Cheaper for a reason, yes. But then there is kind of the misalignment compared with bond. I mean, look at the government bond. They are trading at the 2% of yield.
Yeah, you're not getting any juice, are you? Yeah, you're not getting any juice when it comes to some of the sovereigns.
But we are overweight on the U.S. and the emerging market. We believe these two regions probably have better chance to perform rest part of the world.
We are talking, of course, we keep on having the noise out of Europe, the Dutch government falling, essentially, the coalition splitting apart there. We've got Nicolas Sarkozy's future as French president looking at, well, increasingly uncertain too.
Yeah. But Mr. Holland, the possible winning candidate, seems willing to support the fiscal pact.
He wants to extend it, in fact.
He wants to extend it, but he wants to add in another component, which means supporting growth. So I think it will make a lot of sense. Without growth, the debt situation is going to getting worse in Europe.
Indeed, but again, Spain is still there. Yeah. Spain may well need a bailout. If it should do, that's going to send shockwaves across the world.
Exactly. But on the positive side, we see both the EFSF increased or strengthened the filing wall, and then IMF also willing to step up a sort of supporting sort of capacity. So in that sense, we see that the European leaders are taking or making progress. But at the same time, as you said, the situation is quite serious. What I worry the most is the banking sector in the peripheral European economic zone. Those banking sector, without recapitalization, without injecting capital, is going to deleveraging sharply. As a consequence, this is going to hinder Europe's economic recovery.
Well, of course, with Europe, we could get another round of stimulus, couldn't we, in the shape of the LTROP, the LTRO program, but that's the European Central Bank, of course, meets next week. But ahead of that, Bank of Japan, they could introduce more stimulus. They've got a meeting on Friday, as does the Federal Reserve. Now, QE3 is perhaps not going to be announced at this meeting. It may well be announced in subsequent meetings. I don't know what your view is on that.
Well, I think for the moment, I don't think the Fed is rushing to get out another QE3. Probably they're going to think about how they managing the ending of the Operation Twist, which was going to be ended in June. But I think next year will be a big challenge. Look at the fiscal consolidation, potentially 1 to 2% of fiscal retrenchment, plus kind of the uncertainty continues in Europe. And I think the job market recovery is much more fragile than we expected. So it's likely that still, I think I wouldn't rule out of QE3 next year. This year, it's unlikely because of the continued recovery, particularly the housing market seems to continue to stabilize.
In the U.S.
In the U.S.
And of course, we've got the all-important growth number as well on Friday. Now, the thing about that is that could actually give us some, well, I suppose, certainty whether the U.S. economy and its rebound is for real.
That's the big question, $1 million question. I think right now you have both fiscal stimulus plus the financial or monetary stimulus helping U.S. to recover. That looks quite rosy at the moment. But next year, if U.S. inflation starts to kick, there will be a limit for further sort of monetary stimulus. And then the fiscal consolidation is going to take place. Either it's Obama or another candidate going to win the election because it's become unsustainable, this kind of debt situation in the U.S.
Okay, tell me about the dollar. Where does it go from here?
Well, we are slightly positive on the dollar at the moment, particularly against the euro. We believe that probably the helping of the economic recovery in the U.S. going to help the kind of the dollar to be positively developing. But at the same time, we do see the central bank in the rest part of the world are diversified away from U.S. dollar. That's why we see euro still well supported.
Yeah, it's just astonishing, that is. Yeah. Anyway, thank you very much indeed for joining us. Yonghao there from UBS Wealth Management.